Hi everyone and welcome back to Next Generation Business School, where we empower future leaders in business and finance. On this channel, we dive deep into accounting principles, tourism accounting, financial management, business strategies, and economics insights. So stay tuned and let's unlock top strategy to help you excel in your studies and future career. Please don't forget to like, comments, and subscribe for more valuable contents. And remember, every expert was once a beginner, and with the right knowledge and determination, you can achieve greatness. Your journey to success starts here, so let's get started together. Okay, today we want to focus on credit terms and cash discount. When a manufacturers and wholesalers sell their products in on account or on credit mode, it's meaning that buyer does not pay immediately. And the credit terms are stated in invoice, and these terms specify how long the buyer has to pay and whether any discounts are available for early payment or not. To become more understanding or clear view from the credit terms and cash discounts, please pay attention to continue. Okay, this is a sample of credit terms and the numbers can be different for different economic scenarios or events. We always read the credit terms from left to right. 315 net 30. But what is the meaning of this phrase? 315 net 30. In fact, here the 3 is represent the percentage of discounts, and in this case equal 3%. This amount could be 2%, 5%, 10%, or other suitable percents according to the case and conditions. The next after slash is 15, and the 15 is represent the number of the days that discounts is available. In fact, you can use 3% discounts if you pay within 15 days. Look like the 3%, the 15 also can be difference. For example, it could be 10 days, it could be 15 days, it could be 12 days, and so on according to the case. After the 15, n is net and say that the otherwise the full amount is due in 30 days, and 30 is the number of the days when full amount is due. So cash discount, also known as early payment discounts, are incentives for buyers to pay their invoices earlier than the due dates. And this benefit both parties, buyers and sellers. For buyers, save money by paying less and using 3% or any other percent discounts. And for sellers, they can improve their cash flow by receiving payment earlier, and in this case is 15-day earlier, or could be different for different economic scenarios or events. But why it is matters? Because understanding and using credit terms and cash discounts effectively can significantly impact the business's cash flows and profitabilities, and sellers can encourage faster payment while buyers can save money by taking this advantage of discounts. So next time that you see the credit terms on an invoice, remember to check if there is an opportunity for cash discounts, and it is a simple way to manage your finances more effectively. So let's go and see one economic scenario in relation to this. Okay. In this scenario, we want to consider the amount of discounts under the net cost methods. In fact, in the net cost methods, we consider the discounts in our first recording after the purchase. Look at the economic scenario. On October 3, Adventure Tours purchased 50 sets of camping equipment for $200 and each from Outdoor Supplies Corporation. The credit terms given are 3% within 15 days, otherwise, the net amount is due in 30 days. Again, 3% discount within 15 days, otherwise, the net amount is due in 30 days. This means that the adventure tours can get a 3% discount if they pay within 15 days. Otherwise, the net amount is due in maximum 30 days. We want to prepare a journal entry for adventure tours under the net cost method. In the net cost method, we want to consider the total amount after discount. Total amount after discount. Okay, but before finding the total amount after discount, we should find the total amount. As we know, we purchase 50 sets of camping and each camping set's price is $200. So the total amounts equal $10,000. And because we want to find the total amount after discount, we should find the 97% of $10,000 because 100% minus the total amount of discounts, and in this case equal 3% equal 97%. So 10,000 multiple 97% equal $9,700 is the total amount after discount. Now we want to record this $9,700. For record the $9,700, we should consider two accounts, inventory and account payable. Because we purchase something and we put it in the inventory for sales, you know that we are speaking under the structure of merchandising company. So we purchase something and put it in the inventory before selling it to customers. And the total amount of inventory is increased. Again, we know that increase in inventory is considered as an increase in assets because inventory is belonging to the assets accounts, and any increase in assets accounts considered as debit. So 9,700 inventory debits, and also we need consider the next account in double entry structure as the accounts payables. Why? Because we buy it on account or on credit modes. So accounts payable is increase. Accounts payable is belong to the liability or liability increase. And whenever the liability accounts are increased, we consider them as credit. So 9,700 inventory debit, 9,700 accounts payable credit. So let's continue and consider the next economic events. And this is recording purchase at net cost and continue in the next economic scenarios. So in the previous economic scenario, we say that on October 3, Adventure Tours purchased 50 sets of camping, each for $200. So we purchased total $10,000 on October 3 from Outdoor Supply Corporations with the credit terms of 3% within 15 days. Otherwise, we should pay all the money or all amount is due within 30 days. Now, on October 10, the Adventure Tours pays the full amount due to camping equipment, and we want to prepare the journal entry for Adventure Tours. When the Adventure Tours make the payment, we need to up-to-date our records because the payment takes place, and we need to up-to-date the records because of accounting rules. To reflect that, this liability or account payables has been settled and cash has been used to make the payment. So we consider two accounts: accounts payable because the liability has been settled, and cash used to pay this amount. So accounts payable amount is decreased because all liabilities decreases. And unlike to the previous event, we need to consider debit for decrease in liability accounts. What is the total amount after discounts? 9,700. Please be careful that we consider 9,700. That is the total amount after using discount, because we are acting under the net cost method. For this payment, we use cash, and the total amount of the cash after this payment is naturally decreased. Cash is the most famous accounts of assets, and decrease in assets accounts consider as credit. So after payment of this liability, account payable debits by 9,700 and cash become credit by same amount 9,700. Okay, let's to look to the next economic events or scenario. On October 3, again, Adventure Tours purchased 50 cents of camping equipment for $200 from Outdoor Supplies Corporations. We did some credit terms, that is using 3% within 15 days, otherwise in 30 days the total amount is due. Since Adventure Tours missed the discount period, why? Because we are in October 18 and we passed the 15 days that is mentioned in credit terms. So we cannot use this discount because we are in the period after discount period. So since the Adventure Tours miss the discount period, they have to pay the full amount of $10,000 because the full amount was $10,000. We buy 50 sets, each set was $200, and the full amount before discount was $10,000. Now we are in October 18 and this period is after 15 days and we should pay the total amount $10,000. But how we should record the $10,000? When we miss the discount period and we act under the net cost period, because in the net cost period we want to consider the amount after discount. In fact, we think positively in the simple language. And what takes place here is negative right now. These two are not matched with together. How we should act to match these two terms under the net cost method? For matching of these two economic conditions, we need to consider three accounts. First, account payable. Second, purchase discount loss, that consider as a non-operating expenses because we lost these discounts. And number three is cash, because we pay all of the $10,000 now in cash because this $10,000 is due and we should pay within the 30 days. So start with accounts payables. We need to make 9,700 the total amount after discount as a debit for accounts payables. In fact, this entry decreases the account payables accounts by the amount initially recorded because we initially record the total amount after discount by 9,700. So initial amount by 9,700 is decreased by accounts payables. The accounts payable or liability accounts is decreased. Decreased account payables should be considered as debits. The next account is purchase discount loss. But how much? The 10,000 minus 9,700 equal $300 is the total amount that we missed because we cannot use the discounts anymore. So we consider this $300 as some type of non-operating expenses under the account name of purchase discount loss. And this entry records the loss of discount as an expense and reflecting the additional cost incurring by missing the discounts period. So the purchase discount loss is increases, and because we consider it as a special type of expenses, increase in expenses totally different with revenue and consider as debit. And finally, cash become credited because this entry decrease the cash accounts and decrease in asset accounts that cash is also included is considered as credit. And this is the total amount that we should pay or paid from the cash and decreases it by how much? 10,000. So, have a short review for these economic events. We cannot use this discount when we think that at the first we want to use it under the net cost methods. And for these methods, for matching the positive and negative conditions, we need to use three accounts. Debit accounts payables. When the adventure tours purchase the camping equipment, they create a liability of 9,700, and by debiting accounts payable, we are reducing this liability and indicating that the amount initially recorded as out is being settled. The next account is purchase discount loss, and we debit this account. So debit purchase discount loss, and this record is $300 is the total amount of discount that adventure tours did not take advantage of because they paid after the discount period on 18th of October, and this reflects the lost opportunity as an additional expense. And number 3 is cash credit or credit the cash to settle the accounts payables and account for the lost discounts. Adventure tours use cash for pay these amounts, and by crediting the cash accounts we should a reductions in the company cash balance by the total payment amount of $10,000. So the next methods of recording of credit terms is gross invoice methods. Now we want to discuss with together the gross invoice method. So on October 3, again, the adventure tours purchased $10,000 of camping equipment on credit with terms of 3% within 15 days. Otherwise, the total amount is due in 30 days from the Outdoor Supplies Corporations. Prepare the journal entry for adventure tours. So unlike the net cost method, in the gross invoice method, we assume that we don't want to use this discount amount. In fact, in more professional phrase, in the gross invoice price, we consider the total amount in our initial recording. So the total amount is 10,050 settles multiplied $200 each equal $10,000. So the account payables or camping equipment and inventory accounts are considered. These accounts, inventory accounts, represent the assets a camping holds for sales to customers, and in this case Adventure Tours is acquiring camping equipment from the Outdoor Supplies Corporations. Therefore, We debit the inventory account to increase its balance by the value of the camping equipment purchases, and total amount is $10,000. So otherwise, the inventory accounts is belonging to the assets, and in this case, this amount is increases, and increase in inventory considered as debit. The next account is accounts payables, and these accounts represent the amount of adventure tours out to outdoor supply corporations for the camping equipment purchases on credit or on account mode. Since adventure tours hasn't paid the equipment yet, we buy it and we pay for it later. This account serves as a liabilities, and we credit the account payable account to increase its balance by $10,000. So our liability, and in this case accounts payable increase in liability accounts, and in this case accounts payable considered as credit by total amount 10,000, total amount before any discount, because we are using the gross invoice price method, and we not consider the amount after discount under the gross invoice price method. Okay, look at to the next economic scenarios. On October 10, Adventure Tours pays the full amount due to Outdoor Supplies Corporation. Prepare the journal entry for Computer City. Although we not consider the amounts after discounts in the previous amount, and we recorded total $10,000, we pay in the accounting period, in the discount period right now. So again, because we pay in discount period and in the gross invoice method, we not consider any discounts, and we record the total amount before any discounts, but we pay in the discounts period, some unmatch take place again. This means that in the simple language, first we think that negatively, and we think that we don't want to use the discount, but now what happened? Positive for us, and we paid within the discount period, so we can use the discounts. So we are happy right now, but we need to match these two conditions with togethers by using three accounts. Again, we have accounts payable, and these accounts represent the amount adventures tours out to outdoor supply corporations for the PC products purchases on credit mode. Since Adventure Tours is now making the payment to clear off its debts, we credit the accounts payable account to decrease the balance by 10,000. So the accounts payable is decreases by 10,000. This is a total amount that we consider in the initial recording. But how we paid in reality from the cash? In reality, from the cash, we paid the amount after discounts because we paid in the discount period. So because we paid in the discount period, we pay the amount after discounts, 10,000, 10,000, multiple 97%. And we know that in this case, the total amount of discount is 3%, equal 9,700. So the cash account is represent the cash adventure tours is using to make the payment to outdoor supplies corporations, and we debit the cash account to decrease the balance by 9,700. This reflecting the cash outflow from the adventure tours to pay for the PC products. And number 3 is the new accounts, and this is purchase discounts taken. In fact, the purchase discount taken is reduced cost of goods sold, and in the other words, this is contra cost of goods sold. Because this is reduce the cost of goods sold, we consider always increase in this account under the credit part because it's totally different and contra of cost of goods sold account or this reduced cost of goods sold. In fact, the purchase discount taken is represent the discount adventure tours is available by making the payment early or in the discount periods. And these terms of credit were 3% within the 15 days, meaning Adventure Tools can take a 3% discount and is pay within the 15 days. Since Adventure Tools is paying is in the discount period, it can overall $300, again $10,000 total amount minus $9,700 equal $300 is the amount of discount taken become credit for purchase discount taken. Now we know that how we should match the condition for gross invoice price methods and also for net cost methods. Okay, look at to the next economic event where we have assume that the Adventure Tools waited until November 3 to pay the full amounts due to Outdoor Supplies Corporation. Prepare the journal entry for computer city. Now we know that under the gross invoice price method, there is no unmatched condition take place because first we consider the total amount without any discounts and assume that we not use the discounts, and finally our prediction is true and everything is negative right now and we paid after discount periods and we cannot use any discounts. So also this condition is not good and we don't like that. But from the other point of view, all of these two conditions are same and match with together. So there is no need for any special account to make them match together. In this case, the account payable is decrease. The account payable is decrease because the total amount of liability is decrease and decrease of accounts payable and liability considered as a debit. And also the cash is decreased because we use cash to settle or liability or pay for accounts payment. So cash is decreased and decrease in assets or cash considered as credit. How much? By original amount without any discounts or before any discounts. And in this case equal $10,000. So account payable become debit by $10,000 and cash become credit by $10,000. Okay, let's continue with together returns of unsatisfactory merchandise. Okay, on October 9, Adventure Tours returned $600 of unsatisfactory merchandise purchased from the Outdoor Supplies Corporation on credit of 3%, 15 days, and the total 30 days. The amount is due, and the purchase was originally recorded at net cost methods. Prepare the entry for computer city. Okay, in this case, we want to consider that some sales take place and we paid for it in net cost methods, and we know that the net cost method is included the discount. It's included the discounts. And not all of the purchase amount is returned. From the total return, $600 is returned. So from the total amount, $600 is returns, and we record this 600,000 in the net cost methods. And these returns take place in the October 9 within the discount period. So the October 9 is within the discount period. In summary language, we return $600 from $10,000 value on October 9 when this date is belong to the discount period under the net cost method. In the net cost method, this means that we record the total amount after discounts. So now the return takes place. We need to find the total amount of return after discounts because this return is take place within the discount period and we are acting under the net cost method. So what is the total amount of $600 after discounts? We should make the multiplication of $600 to 97%. So $600 multiplied 97% equal $588. So $600 is the total value of return goods that this operation take place within the discount period under the net cost method. So we consider the total amount after discounts, and total amount after discounts is 600 multiplied 97% equal 588. And we consider two accounts again for this purpose: accounts payable and inventory. With these operations, the total account payable is decreases, and decrease in account payable consider as debits, and also the total inventory is decreased as well, and decrease in inventory consider as credit because inventory belong to the assets, and decrease in assets consider as credit.